What's up, everyone? All right, so this marks the third video on what I look for in the markets before I trade, right? So today is going to be quite simple. It's going to be quite short, and it's going to be it's going to be very, very, very simple, right? Here's what I look at every day. I look at this, the opening price. Okay, I look at the opening price, but now the question is, at what time, right? What time am I going to be looking at? Am I going to be using the normal standard time of Asian Open, which is 7 a.m. 7 p.m. EST, or am I going to be using True Day Open as dubbed by CT, which is at 12 a.m. EST? Here's what I use: 12 a.m. EST, right? Now, it's quite simple with how you try to trade the daily range, right? So we all understand that every candle, right? So every candle has a what? Open, high, low, and close, right? And now again, I know that this is super basic, but bear with me, right? So if we take a bullish candle, for example, right, and we are referring to the opening price as the 12 a.m. EST opening price, right? So opening price time, time, what we're going to be looking at is at 12 a.m. EST, right? So a bullish candle, right? So we have this entire thing. Okay. So we have a green candle over here, right? So we understand, everyone over here understands that this is the open, this is the high, this is the low, and obviously this is the close, right? So all that we are interested in doing is capturing what? Is this entire body. Maybe not the entire thing, maybe 3/4, maybe half of the body. It's up to you and your risk model, right? Or your trading model. Okay, so now the question is this, right? How do you capture your daily range expansion? It could be any expansion if you think about it outside of the box, because what do we have? We have a 4-hour candle, we have a 1-hour candle, we have a 15-minute candle. You can apply this to any candle whatsoever, right? So in order to capture this expansion or the body of the daily range, right? What are you going to look for? Remember, in the previous videos, what did we speak of? We spoke about SMT, right? We spoke about SMT. So what are you going to look for? You're looking for the opening price at 12 a.m. At the opening price at 12 a.m. So this is the 12 a.m. opening price, right? And if you're bullish, what do you want to see price do? You want to see price drop, right? So you want to see price drop into a PDRA, into a point of interest, whatever you want to call it, right? And you want to see what? SMT happen over here through what? We are intermarket analysis, right? You want to look for SMT via intermarket analysis, and then you want to do what? You want to apply the 3-bar formation, the 3-bar fractal that we spoke of in the first ever video, which is like what? Which is like this: 1, 2, 3, right? This is your entry for a buy, and there you go, capturing the daily range expansion, the hourly range expansion, the 4-hourly range expansion, or maybe even an intra-session expansion, right? And the question is this, right? What are you going to be targeting? You're going to be targeting buy-side liquidity, right? Buy-side liquidity. And you're done, because once you pair your orders with buy-side liquidity, once you pair your trade with buy-side liquidity, you're done, right? You take your profits, you call it a day, and you go into what you were doing. Okay, so that's that in terms of a bullish expansion. Now, obviously, it's not always going to pan out like this, right? There's going to be subtle variations. Sometimes it may not even go below the opening price. It may go above it, come back and retest the opening price, and then go back up, right? So there are situations like that. Now, that is up to you to study. Now, I go into it in great detail in my mentorship, but yeah, apart from that, you got to study that, right? So moving on, if you look for a bearish candle, right? So a bearish candle using the same principles as above, ICT's principles, right? You want to be looking for this, right? So I depict my bearish candles as black, same way ICT does, Most of you guys do that, I think, right? So we have the what? We have the opening price, we have the high, we have the low, finally we have the close, right? So now here's the question, right? As always, how are we gonna capture the body of the expansion? Right? Because believe it or not, if you don't look at this, you are unknowingly capturing the daily range expansion, hourly range expansion, or 4 hourly range expansion. Okay, even if you do not know it, if you are unaware of it, okay, you're probably doing it. All right. So we're using the same idea. So we have the 12 o'clock opening price right here, right? You want to see price go up. What are you seeing here? SMT via intermarket, intermarket analysis. Right? So you got your SMT over there. Now look, it can be a 5-minute SMT, 15-minute SMT, a 1 hour SMT, 4 hour SMT, or maybe even a daily SMT. Right? So that is up to you. That is up to what you see. Now, when I say it's up to what you see, it sounds subjective, but it is not. Okay. At the end of the day, you can make money in both sides of the market. I mean, if it's a bearish day, you can capture a long for a retracement. If it's a bullish day, you can capture a short as a retracement and still make money, right? So that doesn't matter. But now over here, what we're talking about is how we can capture the expansion of a candle, maybe a daily range expansion. I'm repeating it, but daily range expansion, hourly range expansion, or 4 hourly range expansion, right? So we want to see SMT via intermarket analysis, and then we want to see price breaking down. So 1, 2, 3, apply whatever you know, any entry techniques or whatever, and watch price do its thing. Okay, because we understand by now that SMT suggests that price is ready to move. Price is primed to move in order, it's basically primed to make a one directional move, right? Now the question is this, right? What is it looking for? A bearish day is looking for sell side liquidity. And now after it has taken out sell side liquidity, it's going to start retracing, which is depicted by this wick. After forming the low, it retraces, forming a wick, right? So I don't need to explain to you how the different candles, how different candles are formed, right? So that's that. So, right. So what did we learn today? Or what did you hear me saying today, right? We understand that, okay, go back up. We understand that the opening price is very important, right? Now, if you want to form this, if you want to make this into a model, right, in and of itself, using this idea itself, right, what do you have? You have time, which is what? London or New York. Alternatively, you can take Asia as well, right? What are you looking for? Opening price. For bullish scenario, you have the opening price. You have bullish SMT below the opening price. You have an institutional swing point forming. And now you have a buy. Okay, now you have a buy. Likewise, for bearish expansion, what do you have? You have the opening price. I'll call it the OP. Opening price, you have the bear SMT above the opening price, because that's the most ideal scenario, right? So I'm going to be speaking about the ideal scenario. The variations I can't speak of on YouTube, right? So bear SMT above the opening price. Okay. And finally, an institutional swing point, which supports a sell. And then what you could do is insert your own entry model. Entry model. All right, so that's pretty much it. That's all I've got for you guys so far. It's quite simple, but it's actually very powerful as well, because that's all we see on the charts, right? Candles. The candles tell us a story. So now imagine the different stories that the high time frame candles can tell us on the lower time frame, if we understand how we can use the opening price and the various price signatures that ICT has to offer in our trading. Right. So that, guys, I hope you like this video. Give it a like, comment, and subscribe if you haven't. And again, if this is something that you already have in your arsenal, then you can feel free to ignore it. Right? If there's anything that you don't like, feel free to hit me up and tell me why, because your opinion matters as well. Yeah, so that's pretty much it. See you guys in the next one. The next one will be even better than this, I promise. All right, so good luck and good trading. Bye bye.